How to make a stop loss and take profit like a machine. Have you ever watched your trade turn from profit to disaster, all because you didn't set a stop loss? Or maybe you've exited too early, only to watch the price skyrocket right after you sold. We've all been there. But today, I'm going to teach you how to make stop loss and take profit levels like a machine. No emotions, no hesitation, just pure precision. I'm Felix, and in this video, we'll break down how professionals plan their exits long before they click buy. You'll learn how to calculate your stop loss like a disciplined algorithm, how to choose take profit targets based on real price structure, and how to let data, not emotion, control your trading destiny. Stay until the end, because I'll reveal a pro-level formula that institutions use to lock profits and cut losses without mercy. Segment 1. The psychology of losing traders. Most traders don't lose because of bad strategies. They lose because of bad discipline. They move their stop loss down, hoping the market will come back. They close profits too early because they're scared it'll reverse. In short, they let fear and greed take the wheel. Professional traders do the opposite. They operate like machines, emotionless, consistent, and rule-based. Retail traders trade to win. Professionals trade not to lose. Your stop loss is your best friend. It protects your capital, your most important weapon. Segment 2. The formula behind a stop loss. Step 1. Define your risk per trade. Never risk more than 1 to 2% of your account on a single trade. If your account is $10,000, the most you can lose on one trade is $100, $200. Step 2. Find your position size. If your stop loss is 50 pips away on Euro USD and your risk is $100, you divide $100 by 50 pips equals $2 per pip. Step 3. Place your stop where your idea is invalidated, not where it feels comfortable. Machines don't guess, they calculate. Segment 3. Stop loss types and smart placement. 3 main types of stop losses. 1. Fixed stop loss, a predefined pip or percentage amount. 2. Volatility-based stop loss, adjusted using ATR indicators. 3. Structure-based stop loss, placed below support or above resistance. Pro tip: combine structure plus volatility, stop loss equals swing low, 1 times ATR. Segment 4. The math of take profit levels. Define your reward to risk ratio, R to R. If your stop loss is $100, your take profit should be at least $200, 2R. A 1 to 2 or 1 to 3 ratio means you can be wrong 60% of the time and still make money. Align take profit with the next major support, resistance, or Fibonacci level. Segment 5. The machine mindset. A machine trader predefines both outcomes before entering. They set and forget, trusting the math, not emotions. Your job isn't to predict the market. Your job is to control risk. Segment 6. Trailing stops and profit protection. Once in profit, protect your gains. Use trailing stops. 1. Fixed trailing stop. 2. ATR-based trailing stop. 3. Structure-based trailing stop. Trailing stops lock in profits while letting winners run. Segment 7. Building your machine rulebook. Create your rulebook. Entry logic, stop logic, target logic, trailing logic, risk rule. Follow it without emotion. Machines don't doubt, they execute. Segment 8. Real-world example. BTC USD example. Buy, $60,200. Stop, $59,000. Target, $62,600. Risk equals 1% of account equals $100. Position size equals $100 divided $1,200 equals 0.083 BTC. Set. Walk away, let the math work. Segment 9. Advanced machine tactics. 1. Partial take profit at 1R. 2. Scale out progressively. 3. Use volatility filters, ATR, average ATR. 4. Daily max drawdown rule. Stop after -3%. Segment 10. Final formula of a machine trader. Risk control equals max 1% per trade. Stop loss equals market structure plus or minus ATR. Take profit equals 2R or next liquidity zone. Trailing stop equals 1 times ATR. Review equals end-of-day journal, not mid-trade emotion. Consistency compounds. You don't need 100 winning trades, just one consistent process executed 100 times. Conclusion. Trading isn't about being perfect, it's about being predictable. Engineer your stop loss. Plan your take profit. The market doesn't reward feelings, it rewards discipline. I'm Felix. Hit like, subscribe, and share this video with a trader who needs to hear it. Trade safe, trade smart, trade like a machine. See you next time.